Hi, I am Anna. I come from www.ntvforex.com. Is it precious, or is it valuable? Analysis. http ntvforex.com. News ID 0E271D98 2022 59:41 AM. There has been a great deal of focus on United States equities in this week, particularly with the S&P 500 and the Nasdaq experiencing setbacks last Thursday. After yesterday's US bank holiday, which saw markets relatively subdued in volume and recovery, today open has seen price begin to drift down again. The question on US stocks being a part of a bubble has been raised by more than just the conservative investor. On the surface, the most recent data results that we have seen out of the US economy would suggest that things are starting to look up. Unemployment has fallen to 8.4%, home and vehicle sales have remained consistent, consumer spending has risen slightly, higher levels of manufacturing and restaurant attendance, with the backdrop of a slowing coronavirus spread. But that is only a skin-deep look. A little more in depth and we find that consumer confidence is at the lowest level seen for more than 6 years. Naturally, respondents are also worried about their jobs. In terms of unemployment benefits, there are still well over 28 million Americans requiring extra assistance, and monetary support stimulus has seen cuts, not expansion. All the while, current federal discussions have stalemated in providing additional stimulus. The idea of a recovery steamrolling over the pandemic is becoming more and more unlikely to me, particularly with furloughs becoming more permanent and more widespread amongst the small and medium enterprise destruction. For many investors, this echoes what we saw in the late 80s, 90s, and noughties. Investors during 87-88, the dot-com era and to a degree, the GFC will have noticed asset bubbles or at the least read about them. Similarities can be seen in each economic event. In 88 it was real estate-related stocks out of Japan, the dot-com speaks for itself, and then the GFC, which came full circle for housing. While every bubble is different, there is always this one element that seems to remain the same every time, that participants are happy to ignore the warning signs. And this behavior spreads as severely as a pandemic does. It starts with one stock, then its competition, then comparable, then the sector, and then it infects other sectors. The results so far have been lofty valuations that generally defy the fundamental principles of economics. Another side effect has been the rise of the Robin Hood-style trader. It feels that speculators dominate the price more than the Tier 1 funds. I cannot say with any certainty, but perhaps some role reversal has occurred in who jumps on vs who initiates the direction. When valuations exceed sanity, it's time to reflect on the real value, not the perceived. Nasdaq H1A having a resta for now. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.